Sorry about that, people, but we're gonna start today with the S&P 500. So this video is gonna be super short because it's only a couple tabs, but it's just to cover the S&P 500. And I will make a video right after, based on crypto. And if I have time and I'm not too tired, I'll do a third video for gold and silver. So anyways, let's start with the S&P 500. So I'm looking at the chart with the MACD, my favorite tool, on the right side. The trend confirmation got triggered of a downturn. Now, that's not a coincidence. I am not surprised because if you see cycles here are pointing to a downtrend into this area, and we also have the Elliott wave indicator pointing down. And then if you look at this MACD setup right here, look at the red lines and green lines. The green line is when the MACD crossed up, and if you notice, let me do a ruler. From this point to this point, it was 315 days, so roughly a year. So close to 12 months. And now let's do it the downtrend when we got the MACD crossing down before it crossed back up. It's a date range. I'm not looking at this like gains or anything. That was 434 days. So really a year and a month, give or take. So typically when we get these big moves from the top area or the bottom area, it looks like it's an extended move. The problem is, or the danger, we've crossed down above the threshold. So yeah, price can bounce and everything on the S&P, but this here is saying that a significant and probably a powerful crash is inbound. And the fact that we got the MACD crossing down signals to me that we should be prepared for a massive drawdown here. What's the magnitude? I don't know. But again, look at these cycles. Cycles also warned us. So I'm going to just go and zoom in right here and use the ChatGPT indicator along with my cycles. You should be able to see what I see. Right here, let me put a line for those of you that need visual reference right here. And I'm going to make it, what color? I'm going to make it white, but I'm also going to make it 4 so it's thick and it stands out. Okay, so at this date right here, this was October in 2018, right? According to this, on the MACD, when we crossed down, we were starting to go down, but this trend confirmed a strong downtrend, and the price went all the way here. So I am going to take a ruler from this point where we got the MACD confirming downtrend into the cycle trough. It was a 16.25% drop, and it took 70 days from the point of this MACD confirmation cross. So what that means is, again, using cycles, I kind of saw this one coming over here. So we go back and we say like, well, did it help you on the COVID crash? Yes and no. It was so damn fast. It was messed up. But right here, we have the MACD crossing down. So the crash was already happening in this area. But let me replay the song. I like the song too much. But here you can see the MACD was already crossing down, and this was in February. So in February, Monday, February 24 of 2020, we got the major signal on the MACD that within the next 30 to 40 days, so basically going into March, which was the COVID crash, we were told short or get out of the market. And what happened was the COVID crash. But again, we had cycles also telling us. So this is why I love cycles, because they kind of give you a warning. Now, obviously, they're not going to give you the top. They give you the, as I've said so many times, the general direction. So anyways, moving on to this point, we repeat the process where we have the cycles right here. I'm going to try and show you again where the MACD again gave you a signal. Right, actually, Actually, it crossed right here. So the MACD on September 2021 gave you another signal that the market was already going to begin a downtrend. Now, yes, the MACD might have crossed down and the market still, where's my marker? The market still went up even though the MACD was going down. So this is extremely, extremely powerful divergence. And so what that means is that when the crash ultimately started, it was more brutal. And so here I'll take the ruler from this point to the first pullback, 23%, and it was 175 days. So that's roughly half of the year. So we're talking like 6 month drop. And then it was a rebound, but a bear flag, and it kept going down because, again, cycles were powerful here, pulling the price down. But MACD got you a signal to get out or prepare to short if you're a trader all the way back in September. So, what does that do to the present? Now we fast forward to the present. Oh, I'll do one more right here. This dip into the smaller cycles, it's not a powerful one. You can see, but it is a dip, and you can see it was being pulled into the trough. But there was two different competing troughs right here. So um, now the problem is this one was in this MACD because it happened in the middle of this indicator setup. Then you knew, okay, the cycles are here, so you knew that, okay, if it doesn't go beneath the 50-day moving average, you can get back in because it's going to continue. And that's essentially what happened here. Because we also had, you see this this orange indicator, the ChatGPT indicator, had already bottomed out. So this basically confirmed that the price is going to rebound from the 50-day moving average blue line right here and continue its rally. And the MACD, sure enough, confirmed the uptrend. So it really, you had two powerful signals here to remain bullish. What we don't have right now is this. Currently, the Elliott wave is signaling a massive downturn going into March and April. So February might be that, if I had to say, like a blow off top. Where am I trying to find? Right, I'm trying to find like the last time this happened, where we got the signal back here. Let's say September 2021, but really there was like a blow off top, and then it was a extreme correction. I don't know if that's what's going to happen here, but according to cycles and even the Elliott wave indicator, we have a massive drawdown coming. Hold on, I want to put something else. Hold on, sorry people, I just gotta put something long. There we go. Why won't there was some good old matrix. Okay, so here, according to the MACD indicator, we've entered a zone of a potential significant powerful downturn. Okay, so I think I've repeated myself, and you have the cycles confirming. So the cycles are saying expect a downturn, a surprise downturn, because we're so near the edge right here. And MACD is confirming the same. Now, the ChatGPT indicator, yes, it has not breached the top red line. So it's not an emergency go short, but it is close to the top. So it's topping. So that's why I'm saying February might be the blow off top. I'm not so sure that that's going to happen right now. I think the first week of February is going to be rough. Typically, that's what happens every month. When you end up in a rally, the following month turns down, and I suspect, according to this, because we have the MACD, the price should begin to show signs of weakness. If it doesn't start tomorrow, I'm still in January 30th right now as I'm recording this, but in an hour or less than an hour, it's going to be the 31st. So we still have one more day. And so I'm thinking the first week of February is going to be rough. And then we might see a recovery bounce going into the blow off top that I'm talking about. But as soon as that blow off top ends, I can see March and April being a strong downturn according to this and using the historical reference of cycles and everything. If you just zoom in here, you can see the downturn projected goes all the way out till April 14. So see, this is not saying it's a guarantee. That's why cycles are saying somewhere around, if I may put a date range, cycles are saying somewhere between here and probably here. Or let me actually start from right, probably here. Yeah. So cycles are saying that's at some point between middle of December into May of 2025, we should expect a significant pullback. We got a retracement or a correction, but it wasn't anything significant. But we are now expecting, according to cycles, a bigger drop. So, anyways, I got to move away from this chart. I got more stuff to cover, but I just needed to focus on this chart because it was mainly built for the S&P 500 using the SPY. Okay, I covered this one on one of my other videos. As a reference point, the blue lines are just to align with the dates on the picture. So the blue line here is 1994. The blue line here should be aligned with 2024. So now I know that the picture is aligned correctly. So now I can look at the red lines. The red lines is what I need you to focus on, including this line right here. This red line is the S&P 500, basically the stock market, if you will. Problem is, look at the red lines. Every time they cross the black line at the zero, according to the 10-year Treasury maturity note, every time it crosses, within 30 to 60 days, a recession or a market crash begins, but the recession tends to last about a year. So we're talking like literally why I think 2026 is going to be the lowest point and an entry point to buy back in. So I believe, and I've said it before, that Q1 2025 might be the blow off top for just about everything before we see a nasty downturn. And common sense would dictate, with all the changes Trump is doing, we're gonna see some sort of cause and effect, right? It should trigger things to either break down or struggles to occur in the economy with a lot of the changes. And it's not just the deportation of illegal immigrants and basically those people that are being deported. Yes, a bunch of them are criminals, but there are some that are paying mortgages that are now deported. There are some that are paying car bills, car insurance, and some of them that have jobs that are just all of a sudden going to stop showing up to their work. So take just use common sense. Just with the immigration and people no longer showing up. Yes, they were illegals and whatnot, but them not showing up, the business is now going to struggle if they cannot find people to replace those positions quickly. That's just in the labor market. The next thing you see if Trump manages to reduce the income tax or get rid of it, which is, I'm a libertarian. You all know that I would love to see the income tax go away. That's also going to cause a lot of problems because the IRS becomes null and void almost. Like they no longer need to do anything except get taxes from the corporations and businesses, but not no longer from the individual. So if he gets all of these changes implemented, yeah, that's going to cause a lot of headaches for the economy. And so he has good intentions, but it's like like the country as a whole is sick. So when he applies medicine to fix everything, the economy, getting rid of the violent people. Now I come from immigrant parents, so I can just speak freely to this subject because I get it. I know why he's doing it. I'm not passing judgment. I'm a libertarian, so I get it. My main thing is the economies where I'm worried that he's got good intentions to restore the country, but in the process, he's gonna cause a lot of pain, and I don't think people are ready for this pain. So according to this chart, so that I don't ramble, we've just crossed that line, and in the past, every time we cross that line, so I'll go from right here to this low point, 798. So that's what. So that's 2 years. 2 years of a downturn because it's 365 days in a year. So this is 2 years roughly. Okay, so that's now that's just one. Then the next red line here was almost again 2 years. So 658. So 658 days. So we started a downturn. So the last two times that this line crossed up, the S&P for 2 years at least was in a downturn. So we look at the next one where we crossed it here. This was the COVID. However, this one was a weird one because it still kept running up even after, but you can see it from this point to this point was 140 days. But then in those 140 days, we dropped by 32%. So actually, let me go back and see how much did we drop by on the previous ones. 54%, 54%. So 54%, 2 years, 54% about 2 years, 30% less than 6 months, 100 and was it 146 days? So that begs the question, if I do the average, then we should expect somewhere out here. I put the box of 2 years representing a 2 year window, but it goes into 2026. So at the very least, we should still assume that in 2026, we should see a low point. Now, I do not expect a flash crash like the COVID because that was like a worldwide event. This previous two drops were economy based related, like I want to say deflation related. So I would say if Trump is in power for 4 years, then it stands to reason that his changes will cause deflation because that's the whole point. People right now need stuff to go down in price so it can become affordable. So I would say his intentions are good, but the unintended consequences of his actions might be deflation, and deflation in the market depends on which side of the coin you're in. If you're a millennial and you have money in the bank, but you haven't bought a house because they're so expensive, Trump might give you what you want. And it goes back to, I mean, I don't want to get political here, but um, with all the changes he's making, you might get your wish of real estate crashing, the S&P crashing, everything might begin to retrace dramatically, but I don't think it can go beyond 361 below this point. I think the point we're looking at should be really at 476, the starting point here. So it could retrace to this. And if it does that, we are looking at probably 21%, which is going to be less than what happened here, which was 30 some percent. So I can see the 21% coming back to this line as a completely normal number, which puts us at 479 or 480. I can see that. However, if we break that, then I think we can go down to 366, and that'll be in 2026. So right now, it's the unknown. The only thing we have referencing here is that previously, whenever we crossed the black line moving up on the last three times, it's been a recession that lasted like almost 2 years. With the exception of 2020, it lasted only a couple months because it was like a worldwide event. It wasn't just the US, it was worldwide. Anyways, I'll move on from this slide. All right, so this is the dollar. Let me see. 18 minutes. Okay, so on the dollar, the trajectory here is that it's gonna retrace. According to this, it should retrace, but then again, you see, it could do this, go down and then back up, which would be like this, go down and then back up, and then the real down. So I don't know what this means. The only difference is that the MACD down here doesn't show any signs of weakness. In fact, it still shows, and I'm looking at the bottom here, that it's still in an upward trend. Damn, that was the whole song right there. Hold on, let me put something else. Let me put some Star Wars, not some. Yeah, put some Star Wars music. Okay. Where was I? Shit, I lost myself. Oh, right here. Um, so here, this would signal that dollar has to go down. The catch here is this: dollar going down means everything else goes up. I'm not so sure that's going to happen though. So this is basically signaling, according to the MACD and all this, that the dollar can still do one final push up, and that final push up might be what triggers a sell off in the market. So the dollar is mixed right now, so I don't have a lot of information on the dollar. But if it were to retrace, I would say the dollar can retrace to this line right here before it resumes an upward trend. So if that is the case, then yeah, you can see a bounce in crypto and all that, but I'm not sold on it. I think still the first week of February, the dollar might try to push up, which would push down stock market, gold, crypto, and what else? Generally, some real estate, but not much. So that's the general idea behind the dollar. Dollar goes up, everything else goes down. Dollar goes down, everything else goes up. And right now, this indicator is saying it should go down. Now, this is the 3 day. Let me go on a higher time frame. Yeah. So on a higher time frame, the dollar should go down, which means we should see a market rally. So that's why I'm thinking probably February might be the blow off top, but I don't think it's the first week. The first week I should see more like a sideways to a downward push. And then maybe the second half of February, I can see the blow off top going into March. However, March and April and May look dangerous according to the charts. So I would say the first week of February, things are not looking good, but things look dangerous for March and April, and that's based on the original chart. This one that this just doesn't look right, and the cycles are right here, and the MACD's already pushing to a downtrend. So this is already beginning a divergence. MACD down, price trying to push up, but I'd say, yeah, I would say February might be the last month. So really, for the traders, you have days to prepare, but even then, I don't like February as it is. So the I'm sorry, so the Renko for the S&P is in a topping phase. This one is still room to the upside. This one is closer to the upside. This one is in the middle, so no decision here. This one is clearly saying it's topping. This one here is saying it's topping. This one is neutral to topping, but so again, there's still room to go up according to the Renko, but not a lot. It's basically saying it's in the final stages before we get to March. So I do think March is fucking dangerous, and April might be worse. Okay, the last one and why I still think the dollar's a problem is right here, crossing up on this indicator, crossing up on this indicator, crossing up on this indicator. There's plenty of room to run up. This one barely crossed up. This one is the only one that says sell, but all of the other indicators in mass are saying the dollar should rally. Now, if the dollar rallies, that means shit will go down in price. It's like dollar up, everything else goes down. So that's what this is saying. So I'm not going to spend too much time on it, but this is basically saying that the dollar is going to peak out in November of 2026. So if you look at it on the opposite side, with in another way, this is saying in November 2026 would be, or Q4 might be the best time to re-enter a lot of positions. So I will say this. Today, I even told my coworkers I closed my gold and silver positions in stocks. I only kept the physical gold and the physical silver that I'm not selling, as I think that might be needed in a real crisis. The stock market or the mining companies, those I just pulled everything out because I'm like, I think it's time to start building a cash position that's significant because of what might come in March and in April. So I'm just letting everyone know I've officially cashed out of just the gold and silver. The cryptos, I'm still in it, but I'm very close to just getting out because I'm waiting for this supposedly blow off top. But anyways, I don't want to deviate because I want to do a video on those as well. So anyways, I think that's it. So let me move back and yeah, so things are looking very bearish for the S&P right now. So it seems like the first week of February is going to be rough. The second half of February looks like that's if we get a blow off top, it's going to be on the second half of February. But then March and April, according to this, let me just zoom in on the cycle right here. Yeah, according to this, even if I do the line right here, it's saying that from March going into April or middle of April, it's a downturn. And it's a pretty big one, really. It's not a small, it's a pretty fucking big downturn. In fact, if we go even into the midway point right here, it'll take us back to the high of 2022. So all of these gains right here get technically reset. You get reset to the date of of, of basically January. So all of the January 2024 gains will be wiped out. Is essentially what this is projecting, that there's a high probability that all of your 2024 gains from the S&P 500 are going to be wiped out. And that's an A, then a B, and then a C. And the C goes into 2026, which is why I keep saying 2026 looks very, very fucking dangerous, but also the best opportunity in your life to buy back in. All right, that's it, people. I need to chill. It's almost 26 minutes here.